Case scenario number 18 now, which is on TDS, capital gain and set off and carry forward of losses. Miss Chanchal, aged 45, provides the following data for her gross receipts for the financial year 21-22 last year and 22-23 current year. She is engaged in agency business. Underline agency business. That means she cannot opt for Section 44 AD presumptive taxation scheme, along with providing services as a tarot card reader. Now, tarot card reader is a vocation, and as a vocation it is one type of profession. If you recollect the definition of the term profession, then profession includes vocation, PGBP chapter. That means she is a professional person plus she is running agency business. She is generally engaged in cash payments and cash receipts. Financial year, receipts from business, received from profession. Profession means tarot card reading and business means agency business. Total gross receipts from both of them for last year 21-22, business receipts for 1 crore 5 lakh, that means greater than 1 crore, more than 1 crore, but professional gross receipts for 47 lakhs, less than 50 lakh rupees. So last year tax audit must have got attracted because of this, but not because of this. Total gross receipts are 1 crore 52 lakh, and for the current year 22-23, business receipts are less than 1 crore 98 lakhs and professional receipts are less than 50 lakh. It means 49 lakh, total 1 crore 47 lakh. That means no tax audit will be attracted for the current year. Current year tax audit requirement condition threshold limits are not being exceeded. Further, she paid an amount of 12 lakh rupees to a contractor for polishing her old furniture in her self-occupied residential house property on 12th April 22 in the beginning of the current year. A 12 lakh is paid to contractor. Ideally, payment to contractor would attract TDS under section 194C. Payment to contractor at the rate of either 1% or 2% depending upon who's the contractor. However, since it is payment for polishing old furniture in a self-occupied residential house, that means this is for personal purpose. Since it is for personal purpose, therefore no TDS under section 194C. Now, if you recollect, in the whole TDS chapter, tax is deductible on personal purpose payment also, except for 194C and 194J, professional fees, etc. So no TDS under section 194C on this. Even TDS will not even be attracted under section 194M also. No TDS under section 194M. Why? 194M says that wherever TDS is not required to be deducted under 194C, tax may be required to be deducted under 194M. However, TDS under 194M is required only if the payment exceeds 50 lakh rupees for the whole year. Here the payment is just 12 lakh rupees. Since it is for personal purpose, therefore no TDS under 194C, and since it does not exceed 50 lakh rupees, therefore no TDS under 194M. Further, on 5th June 2022, same year, she has taken services from a renowned interior designer. Interior designer or interior decorator is one of the professions. Therefore, TDS may be required under section 194J for the same residential house property. Now, since the payment is made to a professional person, interior designer, for the same residential house property which is self-occupied, it will be for personal purpose. Amount is 2,50,000. Ideally, there should have been TDS under section 194J in case payment exceeded 30,000 rupees to a professional person. However, 194J TDS will not be attracted because the payment is for again personal purpose. Both these sections have the same reason, 194J as well as 194C, no TDS on personal purpose payment. Similarly, 194M will also not be attracted. TDS under section 194M will not be attracted because the payment does not exceed rupees 50 lakh. Payment is just 2 lakh 50. So both these payments will not attract any kind of TDS under either of these sections. On 28th May 2022, same year, she sold one commercial property. Here there will be capital gain. One commercial property for rupees 50 lakhs. The stamp duty value as on the date of registration is 58 lakhs. So if you recollect, section 50C, the sale consideration, full value of sale consideration for the purpose of calculation of capital gain will be either actual sale consideration, which is 50 lakh rupees, or it will be stamp duty value. Stamp duty value should be on the date of registration, which is 58 lakhs. However, stamp duty value can be taken into account for the purpose of 50C only if stamp duty value is exceeding 110% of actual sale consideration. Actual consideration is 50 lakh. 110% of 50 lakh will be 55 lakhs, and 58 is greater than 55. Therefore, 58 will be taken into account. However, 50C Proviso 1 and Proviso 2 state that instead of stamp duty value as on the date of registration, we can take into account the stamp duty value as on the date of agreement if some amount was received by the concerned person, assessee, on or before the date of agreement by way of account payee check, account payee draft or ECS, or through other prescribed electronic modes. Here stamp duty value as on the date of agreement is 54 lakh, and part payment by account payee check was received, underline account payee check was received on the date of agreement. Since some part of the payment is received by account payee check on or before the date of agreement, therefore stamp duty value as on the date of agreement will be taken into account and not the stamp duty value as on the date of registration. Stamp duty value accordingly is 54 lakh, but 54 lakh does not exceed 110% of 50 lakhs, the actual sale consideration. Therefore, eventually, as per proviso 1 and 2, the sale consideration will be actual only and not stamp duty value. Though the stamp duty value of 54 lakh is higher than 50 lakh, but since 54 lakh does not exceed 110% of 50 lakh, therefore it is being ignored. It was purchased for 40 lakh rupees on 28th June 2020. When is it being sold? It is sold on 28th May 2022, purchased on 28th June 2020. 28th June 2020. When will it be called as long term? In order to be called as long term, period of holding should be greater than 24 months and not 36 months. 28th June 2020 acquired and 28th May 2022 it is sold. The period of holding is less than 2 years, less than 24 months. Therefore, it will be considered as a short-term capital asset. Therefore, no indexation. Cost inflation index numbers are provided to us for both the years, year of acquisition, year of transfer, but they are not relevant. Short-term capital gain, sale consideration will be 50 lakh minus cost of acquisition will be 40 lakhs as given here, and accordingly there will be short-term capital gain of 10 lakhs. 50C is applicable for short-term properties also and long-term properties also. Applicable only for immovable property, long-term, short-term both. It is applicable not only to residential property, it applies to commercial property also. It is applicable to all types of land, building or land plus building. The brought forward long-term capital loss. Long-term capital loss brought forward from unlisted shares for financial year 21-22, that is last year, is 5,50,000. This is brought forward long-term capital loss. We know pretty well in set off and carry forward chapter we had studied that long-term capital loss can be set off only and only against long-term capital gain. Short-term capital loss can be set off against short-term capital gain also and can be set off against long-term capital gain also. But long-term capital loss can be set off only against long-term capital gain. So this 5,50,000 cannot be set off against this short-term capital gain of 10 lakh. No set off. And if assessee does not have any other long-term capital gain in the question, then this will have to be carried forward to the next year. Proceeding further, during the year, Ms. Chanchal incurred a loss of 70 lakh rupees while trading in agricultural commodity derivatives. Now, agricultural commodity derivatives, no CTT. CTT means commodities transaction tax. The way we have STT, securities transaction tax, same way we have CTT. CTT we had discussed in PGBP chapter, if you recollect, both of them we had discussed. It is applicable on commodities transaction except in case of agricultural commodities derivatives. This is a 70 lakh rupees. This will be non-speculative loss. Derivative transaction, loss from derivative transaction trading will not be considered as a speculative gain or speculative loss. It is a non-speculative loss. That means it's a normal business loss. However, this 70 lakh can be set off against PGBP income, or it can be set off against short-term capital gain also, which we just calculated 10 lakh rupees. Current year PGBP loss, non-speculative PGBP loss can be set off against other heads of income also, but first priority will be given, that will amount to inter-head adjustment, but first priority will be given to inter-source adjustment. Other heads of income it can be set off. However, we will see if there is any PGBP income in the current year or not. Chanchal does not want to opt for 115 BAC. Based on the facts of the case scenario given above, choose the most appropriate answer. 18.1, is Ms. Chanchal liable to tax audit under the Income Tax Act for PY 22-23? As far as tax audit is concerned, we'll have to check the turnover of the current year. Turnover of the current year from business is less than 1 crore, the threshold limit for tax audit, and it is less than 50 lakh for professional gross receipt. Less than 50 lakh, that means no tax audit will be attracted for the current year. Agreed, last year's turnover from business exceeded 1 crore. Professional receipts were less than 50 lakhs. However, last year tax audit might have been attracted, but no tax audit in the current year. So correct answer is no, as the gross receipt from profession, business or profession are below the specified threshold limit? Our answer is B. First point is A. A is yes. That is a wrong answer. C is also yes. D is also yes. Therefore, C and D are also incorrect. Correct answer is B. Let's check what's Institute's answer. Institute's answer is also B. No, tax audit not attracted. Our answer is correct. Now proceeding further with 18.2. With respect to payments made to contractor and to the interior designer during previous year 22 23, Ms. Chanchal consulted various persons and they have the following views. 1, 2, 3, 4, 4 different views. First views, she is required to deduct TDS. Sorry, wrong answer. She is definitely not required to deduct TDS. Neither under section 194C while paying to contractor, nor under section 194M because payment does not exceed 50 lakh. Neither under section 194J while paying to interior designer, nor under 194M. These two sections not attracted because payment is for personal purpose, and 194M not attracted because payment does not exceed 50 lakh rupees. So first view, she is required to deduct TDS under 194C and J as her turnover from business for the previous year last year exceeded 1 crore. This is a wrong answer. She is required to deduct tax at source under 194M on both the payments. 194M also will not apply because the payment does not exceed 50 lakhs. Third point, she is not required to deduct TDS neither under 194C nor under 194J since such amounts are paid for personal purpose. This is the correct view. Fourth view, she is not required to deduct TDS under 194M since payments to each individual does not exceed 50 lakh. This is also correct. 3 and 4 are the correct views. What are the options? Number A, 3 and 4. This is the correct view. This is the correct answer. B is 1, C is 2 and D is 1 and 4. These three are wrong answers. Correct answer is A for 17 for 18.2. Let's check what's Institute's answer. Institute's answer is also A. 3 and 4 views are correct. 18.3, our answer is correct for 18.2. Proceeding further, 18.3, what is the amount and nature of capital gain chargeable to tax in the hands of Ms. Chanchal? We have already calculated 10 lakh short-term capital gain. Other answers are wrong. Our answer is B. Let's check what's Institute's answer. Institute's answer is also B for 18.3. Our answer is correct. 18.4 is the last one. What is the amount of losses which can be carried forward to AY 24-25 next year, assuming that business income is 45 lakh and income from profession is 25 lakh for the previous year 22-23. Business income PGBP, business income is 45 lakh, professional income is 25 lakh. That means current year's income from PGBP is 70 lakhs. And then we have agricultural income, we have PGBP loss, non-speculative loss from trading in agricultural derivative. PGBP loss is 70 lakhs. First priority will be given to inter-source. Then we have, this will become nil. Then we have short-term capital gain, which is 10 lakhs. And then we have brought forward long-term capital loss, which could not be set off against this. Long-term capital loss was 5,50,000. Here it was given 5,50,000 long-term capital loss. 10 lakh is a short-term capital loss, short-term capital gain that we calculated, and we also discussed that these two cannot be set off against each other. So this 5,50,000, in the absence of any long-term capital gain in the current year, this will have to be carried forward to the next year. So only loss which can be carried forward to the next year will be brought forward long-term capital gain under section 74. A is the correct answer. 70 lakh, B is the wrong answer. That has been already set off. This is already set off as we discussed. No loss is required to be carried forward since brought forward loss and current year loss are set off against current year's income. No, could not be. Brought forward loss could not be set off. 5,50,000 under section 74 and 70 lakh under 73. 5,50,000 is correct but 70 is wrong. Therefore D is a wrong answer. Correct answer is A. 5,50,000 under section 74. Institute's answer is also A. Our answer is correct. With that, this case scenario comes to an end. See you in the next video with case scenario 19.